Financial intelligence is a term that gets thrown around a lot these days, but what does it really mean? At its core, financial intelligence is the ability to interpret and use financial data as if it were a language, telling the story of a business's health, potential, and direction. It's not just about knowing how to read a balance sheet or an income statement. It's about understanding the narrative behind those numbers. It's about seeing past the figures and recognizing what they indicate about past performance, current situations, and future possibilities. Let's break it down. Financial intelligence goes beyond basic accounting knowledge. It's about having a nuanced understanding of financial statements, spotting trends, and making predictions based on financial data. This skill set empowers business leaders to decode complex financial information, transforming it into actionable insights. It allows companies to navigate risks, seize opportunities, and make decisions that are not just sound but strategic. In today's data-driven world, the importance of financial intelligence has skyrocketed. We're surrounded by information, but sifting through it to find meaningful insights is a premium skill. In an environment where financial decisions can make or break a company, the need for financial intelligence is paramount. Now, let's talk about why financial intelligence matters in business. It's not just a buzzword tossed around in boardrooms. It's essential for making smart decisions at every level of a company. Whether you're a CFO or an entry-level employee, financial intelligence impacts your decisions, from daily operations to high-level strategy. It helps businesses stay on course in a constantly changing and competitive market. Ultimately, it's about making choices that are beneficial not just for short-term profits, but for long-term success. So, what are the key components of financial intelligence? First, we have financial statements. Understanding these is crucial because they serve as a health report for a business. Think of the balance sheet as a snapshot of a company's financial standing at a specific moment in time, showing what it owns versus what it owes. The income statement tells you how much money the business made or lost over a certain period, while the cash flow statement tracks the inflow and outflow of cash, giving you insight into the company's liquidity. Next, we have budget analysis and forecasting. Budget analysis is about knowing where every dollar comes from and where it goes. It's your financial discipline. It involves comparing actual results to projected numbers, understanding variances, and adjusting strategies accordingly. Forecasting, on the other hand, is like peering into your business's future. It's not about making random guesses. It's about making informed estimates based on past and current financial patterns. This forward-thinking approach enables businesses to plan for various scenarios, reduce risks, and seize upcoming opportunities. Now, let's look at how financial intelligence is applied across different industries. Take a small retail business, for example. Here, financial intelligence isn't just a tool, it's a lifeline. Managing cash flow is key. Retailers need to know when sales peak and dip, track costs, and maintain financial stability despite market unpredictability. In this sector, financial intelligence is about detailed budget tracking and efficient inventory management. It's knowing which products are flying off the shelves and which are gathering dust, allowing for smart purchasing decisions that minimize waste and maximize profitability. Contrast that with a large manufacturing corporation. Here, financial matters are complex and carry significant weight. These companies focus on strategic financial moves, understanding global markets, and planning finances for the long haul. They face various challenges from managing diverse products and dealing with international suppliers to heavy research and development spending and navigating numerous regulations. To be financially savvy in this environment means using advanced methods to manage risks, creating detailed financial plans, and employing predictive analytics. The goal is to strike the right balance between immediate profits and long-term strategic objectives. When we compare financial strategies across industries, we see distinct differences. In a small retail business, financial intelligence centers on immediate operational efficiency and cash flow sustainability. It's a hands-on, day-to-day approach where agility is paramount. In contrast, large manufacturing firms employ financial intelligence more strategically, focusing on scalability, market expansion, and long-term investment in innovation. Now, let's get into some advanced tools and techniques that transform numbers into actionable intelligence. First up is ratio analysis. This is where you play financial detective, looking at ratios like profit margins, return on assets, and debt to equity to get a quick snapshot of a company's financial health. It's like checking the vital signs of your business. Then there's trend analysis, where you examine financial data over time to spot patterns. Are sales consistently growing? Is there a seasonal dip in cash flow? This isn't just about observing the past. It's about predicting what might happen next. Cash flow forecasting is another critical tool. Cash is the lifeblood of any business, and forecasting future cash flow is essential. It's about making informed predictions to prevent financial challenges. It's not about predicting the future like a fortune teller. It's about making smart estimates to ensure you have enough funds for daily operations and growth. Now, let's talk about the impact of AI and big data on financial decision-making. This isn't just a trend, it's the future, and it's already here. AI and big data are revolutionizing financial analysis by processing numbers at a scale and speed that humans simply cannot match. AI algorithms can analyze market trends, predict consumer behavior, and even make automated trading decisions. This enhances efficiency and helps uncover insights that might slip past human analysts. Big data analytics allows businesses to sift through massive amounts of data, not just financial, but operational, customer, and market data, to find patterns and trends. This comprehensive view of your business and the market enables timely and informed decisions. To illustrate this, consider a retail chain that uses AI to analyze customer purchase data. This insight helps them stock the right products at the right time, boosting sales and reducing inventory costs. Financial services companies employ big data analytics to assess credit risk, utilizing a combination of financial data, social media activity, and online behavior to make lending decisions. A manufacturing firm might use trend analysis to forecast product demand, adjusting production schedules to maximize efficiency and reduce costs. Now, let's delve into the metrics and benchmarks that power financial intelligence. Metrics are your business vitals, like revenue growth rate, profit margins, and customer acquisition costs. They tell you if your business is healthy, thriving, or in need of a serious overhaul. Benchmarks, on the other hand, allow you to measure your performance against industry standards. They help you determine if you're leading the pack, keeping up, or lagging behind. Statistical evidence consistently shows that businesses leveraging financial intelligence tend to have better market positions and financial stability. Companies that conduct regular financial analyses often report higher ROI and improved operational efficiency compared to those that do not. It's not rocket science, it's just smart business. Visual data representation is another crucial aspect of financial intelligence. Graphs, charts, and infographics are powerful tools that turn complex data into clear, actionable insights. Imagine trying to identify a trend in a sea of numbers versus spotting it instantly on a line graph. That's the difference visuals make. They allow you to see the story your data is telling at a glance. However, it's essential to acknowledge the challenges and limitations of developing financial intelligence. Data accuracy is a significant issue. Your financial intelligence is only as good as your data. Inaccurate or incomplete data can lead to poor decision-making. Additionally, there's often a shortage of skilled personnel who can interpret financial data in the context of your business. Another challenge is the subjectivity in data interpretation. Numbers don't lie, but people can misinterpret them. There's always a risk of bias, seeing what you want to see instead of what's actually there. Over-reliance on historical data can also be problematic. While it's valuable, past performance doesn't guarantee future results. It's like driving while only looking in the rearview mirror. Helpful, but not if you're not watching the road ahead. Ethical considerations are crucial in financial decision-making. The profit versus ethics dilemma is real. In the pursuit of profit, it's easy to stray into ethically gray areas. Financial intelligence should not just be about what's legal, but also about what's right. Transparency and accountability are essential. When wielding the power of financial data, you must be responsible in your decision-making. Building trust while pursuing profits is not just good practice, it's essential. Let's look at some real-world scenarios to illustrate the power of financial intelligence. Imagine a mid-sized e-commerce company facing fierce competition and fluctuating market demands. They decide to leverage financial intelligence by diving deep into their financials, analyzing sales data, customer behavior, and market trends. This leads them to identify a golden opportunity in a niche market segment. By reallocating their marketing budget and adjusting inventory to meet newfound demand, they experience a significant uptick in sales and improved profit margins. They don't just survive, they thrive, all thanks to financial intelligence guiding their strategic decisions. On the flip side, consider a tech startup brimming with innovation and ambition, but lacking financial intelligence. Driven by passion, they pour resources into developing a cutting-edge product without thorough financial analysis. They overlook crucial factors like market readiness and production costs. The product launches to much fanfare, but sales are minimal. The costs outweigh returns, leading to financial strain they can't recover from. This is a classic case of flying too close to the sun without checking the fuel gauge. What can we learn from these scenarios? First, data-driven decisions win. Financial intelligence was the guiding star in the success story. It showed them where to go and how to get there. Second, the failure story highlights the dangers of letting passion override prudence. Financial intelligence grounds aspirations in reality. Lastly, both scenarios underscore the importance of a holistic approach. It's not just about the numbers, but the stories they tell and the futures they predict. When we consider global perspectives, it's clear that financial intelligence isn't a one-size-fits-all solution. Each region and country brings its own economic and regulatory quirks to the table. Economic variances can be dramatic, from the high-tech hubs of Silicon Valley to emerging markets in Southeast Asia. Financial intelligence in a stable, developed market looks vastly different from that in a volatile, developing market. Regulatory differences also play a significant role. What works in one country might not in another, requiring financial savvy and a keen understanding of local laws. As we navigate this global landscape, it's essential to balance profit with ethical responsibilities and social impact. In today's hyper-connected world, the social impact of financial decisions can make or break a company's reputation. Looking ahead, the future of financial intelligence is bright. We see the dawn of machine learning and AI making big waves in financial analysis. These technologies will become increasingly sophisticated, spotting trends and crunching numbers at an unprecedented scale. Real-time data analysis will become the norm, allowing businesses to pivot strategies on the fly. To adapt to these upcoming changes, businesses must embrace technology. Relying solely on spreadsheets and gut feelings is no longer sufficient. Companies need to invest in financial education and talent, ensuring their teams are equipped to navigate the complexities of financial intelligence. Moreover, as ethical and sustainable practices gain importance, businesses prioritizing these values will not only survive but thrive. In conclusion, the power of financial intelligence in decision-making cannot be overstated. It's about understanding financial statements, analyzing trends, and making informed predictions that guide strategic choices. Financial intelligence is a dynamic tool that must adapt to various economic and regulatory environments while balancing profit-making with ethical responsibility. As we move forward, remember that financial intelligence is more than just understanding numbers. It's a strategic asset that allows businesses to view the past, understand the present, and predict the future. It's about making informed decisions that are financially sound, ethically responsible, and aligned with long-term goals. So, embrace financial intelligence, stay adaptable, and keep your ethical compass handy. Here's to making smart decisions, riding the waves of change, and building businesses that are not just successful, but also sustainable and responsible.